Thanks for staying with us. Now, yesterday during the budget speech, Finance Minister Enoch Godongwana announced that Treasury has been forced to tap into the country's 500 billion rand gold and foreign exchange contingency reserve account to help pay down spiraling government debt. Now, some economists and business as well as political leaders have cautioned against this. They say that if this is not done in the right way, it could have some serious repercussions. So what does this fund do and how does it all work? Let's help you understand exactly what is happening here. For a discussion, we're joined by Dr. Iraj Abedian, Chief Executive at the Pan-African Investment and Research Services. Thank you so much for your time, Dr. Abedian. I mean, looking at what some of our viewers were asking last night, they were trying to understand what exactly is this fund and how does it all work? Let's help them understand.
Thank you very much, Mangiva, and greetings to our viewers. Every reserve bank globally is government's investment banker. It takes care of also the financial, especially foreign exchange requirements of the economy, meaning when we import, we need a foreign currency, be it pound, be it yen, be it dollars or whatever. And when we export, likewise, those foreign inflows coming into the country, that all of that goes through the central bank or the reserve bank. And the reserve bank, therefore, over time builds a foreign reserves, contingency reserves that are absolutely important for the reserve bank's ability to manage the cash flows as well as to have some buffer when markets go into exceptional volatility. You often have heard that, for example, there's a run on the currency. 20 years ago, we had the pound under attack. Then we have Argentina's currency under attack. Russia, our own, came under attack in 2000, 2001, and a couple of occasions thereafter. So from time to time, market volatility in the financial markets, and more specifically in the foreign exchange market or in the currency markets, and become extremely volatile for a variety of reasons. In those times, the reserve banks and central bankers in general, they need to have a contingency fund to interfere, and not to stabilize or to target the currency, but to remove the volatility, extreme volatility. And for that, the central banks, including our own reserve bank, has a foreign exchange contingency. There's also another occasion that the Reserve Bank may require that fund. For example, let's assume that conditions globally get such that international trade gets disrupted for 2-3 months. We see Red Sea. Remember COVID-19, the ports were not operating. More recently, our own ports are so inefficient that we had a queue of exports, and we had a pile of iron ore that we couldn't export. So what happens in those times? The country is not earning foreign exchange, yet the country needs urgent imports, such as medicine, such as other items of running the economy. And therefore, in those times, the contingency fund comes to manage or help the country, and help more specifically the Reserve Bank to manage the cash flow requirements. Even if export earnings are delayed by 2 months, 3 months, the Reserve Bank has enough contingency reserves to cover or to pay for our vital import items such as medicine and other inputs.
And quite interesting, because some of our viewers are also saying that then it means if you are now going to dip into the reserves, it means we are in trouble, are we?
We are not in trouble, but we are now less secure. This is an act on the part of the minister, not a clever act, but it's an act of desperation. He says, I've run out of options. I don't have tax revenues come in. I've borrowed too much. And therefore, the only option left is this contingency reserves. If you look at it, a family would be that the income runs out, the debt is too high, then you start selling furniture and you're selling family assets, so to speak. And this is pretty much what the minister has decided to do, to start selling family assets or countries or national assets. Very important. We are not as secure as we were 2 weeks ago, because if volatility happens that nobody can predict, the Reserve Bank is now less able has less reserves to cope with those extreme volatilities.
Now, then one would then ask the question naturally then after what you've just said, that was there no other way to be able to mitigate these, tough times that we're finding ourselves in then?
It depends where you sit on the ideological spectrum. Was there no other way? 5 years ago, 10 years ago, the government knew that this is the road. It's like getting in a tunnel. If you're not turning the economy around, if you're not dealing with the structural reforms that the country needs, if you're not investing in ports, railways, etc., you can rest assured the economy will contract. You can rest assured tax revenue will come down. And therefore, it's not something that happened, government suddenly waking up facing this situation. The government has unfortunately been party to bringing this situation around by not doing what the government should be doing, which is taking care of the infrastructure, to making sure that railways operate so that pile of our iron ore and coal are not left, not being able to export them and earn. So I think there was a lot of options, but government didn't do what had to be done for 8, 9, 10 years. As a result, now, as I mentioned earlier, has come to a desperate cul-de-sac. It's got no option but to start selling family assets or country's assets, if you like.
And there's a view by some economists that, this money needs to be used to address South Africa's growing debt and not to fund more government spending, as that could be detrimental. I wonder, what are your thoughts on that view from some economists?
Yes, that is, again, it's not the best way of settling our debt. The best way of settling our debt, which is sustainable and also conducive to creating more welfare for the poor and the vulnerable, is to get, as soon as we can, no matter how hard, to get our growth going, so tax revenues can begin to flow in, so that jobs are created and less people are dependent on government handouts. So yes, let's assume we take all the reserves and reduce our debt. But tomorrow, our debt is so much less, but our situation hasn't changed. We are not better off. We haven't got more jobs. We haven't got more prosperity for now and for the future. So I think we need to be careful not to get into a short-term debate, which is really a not constructive debate. The question, in my view, Bongive, should be, what should the government and the country as a whole do urgently? Not hoping that things will turn around. Urgently from today, what should we do to avoid the situation or to get our economy going? And the sad part of it, Bongive, is that this economy should be growing between 3 to 4% comfortably now. But for the government to throw its hand in the air and say, well, commodities have gone down, we are not, tax revenue is not coming in, as if they haven't been partly, or as if they don't have a critical role in doing the reforms that are needed in order to avoid being in this desperate situation.
And as a final question then, there are some who are saying that dipping into these reserves has a lot to do with the timing of where the country finds itself in right now and when the budget was delivered. Some are saying that it's an election year, so you can expect this. I wonder if you agree with that view?
Look, that's what I said, where you sit on along the spectrum. Some economists would, or some ministers, or some government ideologically would have said, we need this amount, let's bump up VAT and get the revenue in. Let's put the pressure on the spending and not cut into the reserve. So that could have been an option. But in the election year, in a democratic society, be it in America or here, governments are really, really constrained to put pressure on the voters, on the citizenry. So they choose the path of least resistance. But it will come to catch them along the way. It's not a free lunch anywhere that any politician can get away with.
Dr. Abedian, thank you so much for breaking it down for our viewers tonight so that there is an understanding of what exactly is happening here. Do appreciate your time. That was Chief Executive at the Pan African Investment and Research Services, Dr. Iraj Abedian.